Folks, if you don't know who Bill McBride, aka Calculated Risk, is, I recommend you look him up. He's a young man who successfully called the housing top and, more importantly, the housing bottom. Lots of people have been celebrated over the years for calling the top. Very few, and Bill may be one of the handful of folks who called the top and the bottom. So Bill is not a perma bear or frankly a perma bull. He is full of information, full of great data, and deserves our respect. So we will talk about that. We also need to highlight what Altos Research is saying, what's going on in the data. We look at this weekly. Daryl Fairweather, chief economist at Redfin, had some very interesting data on home prices that you need to pay attention to. And we got a small business optimism survey today that might be trending in the right direction, but still not where it should be. But first, folks, for those in the school community, I wanted to give you a heads up that unfortunately Henry Washington has asked to reschedule. We did have him on the books for Thursday at 11 a.m. He has had something come up in his busy schedule. So we are actively looking to reschedule that, likely sometime next week or the week after. But Henry Washington will undoubtedly be in the school community. I actually think, frankly, that's a good thing for us because we were going to go back to back with Lance Lambert and then Henry Washington. That probably would have been too much. So on Thursday, you are going to get the opportunity at 10 a.m. Pacific to talk with Lance Lambert and ask all of your buy box questions. Lance has all the data. He has years of data. This is going to be a highlight for many of you with the opportunity to talk to Lance, talk about your cities, talk about your buy boxes, and really dig in. So if you're not a part of school, it is time to sign up this Thursday, 10 a.m., not to mention classrooms and growing community and all of that. So let's just get right into it. Bill McBride, again, via Resi Club. Again, Resi Club Analytics is the website. Again, he called the top in 2007 and I think more impressively, the bottom in 2012. So in this conversation or interview with Lance Lambert, Bill basically let it be known that currently he does not see a 2007 housing bust, bubble, things of that nature. What Bill McBride asks you to look at, asks you to understand, is 1978 to 1982. Why is this important? Well, again, according to Bill McBride, that is when rates took off, high rates. High rates strained affordability. Strained affordability led to a crash in home transactions. And then finally, there was no national housing price crash. For those who've been on my channel for any length of time, who does that sound like? Who has been highlighting that? Who has been taking crap from the doomers who don't understand that you can have a transaction crash without a price crash? And I've been telling you to go get the 54-year spreadsheet because the answers reside in there. Maybe I will take less grief because now we have the experts like Bill McBride kind of chiming in, guys. Hey, go look at 1978 to 1982. You will see lots of similarities. And clearly, I agree. All right, what is Daryl Fairweather talking about? Chief economist at Redfin. For folks looking for price reductions, here is your first crack in the armor. According to Daryl, the 4 weeks ending June 13th, homes sold actually were less than list price. The average home sold for negative 0.3% of list price. Said another way, for those 4-week period, sellers got 99.7% of asking. Again, folks, I'm highlighting, I'm imploring you, if you are in the market to buy a home or if you are in the market to buy an investment property, do the work. Understand days on market. Find the property where there may be a motivated seller. Write disrespectful offers. You don't need every deal. You just need one deal. And again, why is the negative 0.3 or 99.7% of list price important? It was the first time all year where the sale to list price was negative. So maybe we are starting a trend. So again, very interesting. That leads us right to Altos Research. Again, we talk about Mike Simonson and team every week, or it seems like every week, because they have the real information. Looks like listings are up to 653,000. That is up 1% week on week, up 40% year on year. Again, I do think listings will continue to rise until we get to cancellations and expireds and withdrawns. I think a lot of these, I mean, you guys tell me, you tell me. I believe, at least looking at my market, there are lots of active listings which are not real. What does that mean, not real? What I mean by not real is the seller has put up a wish price. Pick a number, 310. In today's market, maybe it should go for 290. But because the seller doesn't have to sell, they are only taking 310. So what happens? Well, the first 10 days, the first 20 days, there's a bunch of activity. And then the property is known as a dud, dead, and it just runs out to the expiration date. I think there's a lot of what AKA stale listings inside, at least my buy box, but I don't know about yours. On top of that, there were 87,000 new listings last week. That is up 12% year on year. Just for context, in 2022, so during the pandemic, that the last week had 114,000 new listings. So again, we are really seeing the selling season come to an end and people are pulling back. We did have 68,000 new pendings. That's actually down 8%. We had the median price was 455K, about flat, and 38% of homes had a price cut. So again, if I was looking out there, this is what I would look for. Days on market, above some number. Maybe the seller's already taken one price cut. If I had the tools or ability, I would go and try to figure out how much debt does the seller owe. There are tools out there. There are maybe your title company, somebody can help you with that. But I want to know the entire picture of the listing so I could write a good offer. I got a very interesting update from Danielle Fountain. Danielle Fountain, somebody's been on the channel once or twice. We communicate on Twitter or X a bunch. And she indicated that, like Matt the Mortgage Guy, she was seeing a lot of her pendings come back with conditions, meaning the loans coming back with conditions. And again, Danielle's an agent, not a mortgage broker, but she was having a lot of her files have a lot more conditions. This is something we warned you about last Wednesday. Your process to get a loan done is going to be harder. So Danielle Fountain reached out to several of her lenders, and this is what she was told off the record. Basically, and this makes, well, I don't know. You tell me, does this make sense? Fannie Mae, Freddie Mac have the same number of employees that they had 2 years ago. Why is that important? Well, 2 years ago, they were doing a lot more origination and buying. They were busy. Now, in case you haven't paid attention, lending is in a depression. Again, remember, same number of employees. So what are those employees doing? Because they're not working on new files. They are combing through old files, finding issues, and forcing lenders to buy them back. Makes sense to me. Now, if you're a lender being forced to take a loan back, what does that mean? Well, if you have to sell it, you're going to sell it at a discount to someone, or B, you're going to hold it on your books. So what does that mean? That means you're going to tell your employees on all new files to double and triple down. So again, if you're getting a Fannie Freddie loan, just be aware you are going to be, I would guess your time to get a loan approved is going to be extended, where you used to get 3 or 4 conditions and you can expect 15 or 20. It's just where we are in the process. So let's talk about this new small business optimism survey. Again, the numbers aren't important, but we will go through them just to baseline. The number came in at 91.5. That is up 1 point. However, it is below the historical average. The historical average for this optimism survey is 98. 98 is a long run average. So we are at 91.5, significantly below that. More importantly, we are now below 98 for 30 months. That is 2.5 years. What does this mean? I've told you many times. It means the big boys who have access to credit, access to capital, have cash on the balance sheet are winning. Small businesses are losing. Their lenders are out of the market, commercial banks. They don't have the capital, cash on hand. They can't compete for employees. It's just rough out there. We have unfortunately not only broken the housing market, but we really have made the big stronger and the small weaker. There is some good news in this optimism survey. It looks like, according to some sub questions, it is becoming a little bit easier to hire. Hopefully that is a trend that continues. They are feeling, on average, slightly better about the economy. And then finally, they are looking to add inventory, aka deploy capital. So maybe, just maybe, we are on the cusp of turning this around and maybe getting above that 98 number here in the next 3 to 6 months. The last thing I have for you folks is it looks like consumer credit. Consumer credit jumped in June. Yes, it looks like consumer credit jumped just over $11 billion in the month of June. The month before, which was May, was up $6.4 billion. So a big jump, almost a double. The expectations were it would go up to $10 billion. So again, credit in the month of June exceeded expectations. This is kind of a double-edged sword. This means we still have consumers getting more credit, which of course, as consumers, we deploy. But it also really points out that the financial conditions are not that restrictive. We don't have banks canceling credit lines, slashing credit cards. That's when you know things are going on, is when credit retracts. Credit did not retract. Again, in fact, it actually grew more than expected. Folks, do me a favor. Time to sign up for school. We are at 185 students. I believe it really starts to take off at 200. We are getting more and more people collaborating. Again, the beauty of the school platform is you can post questions, ask comments, network. You got free education. You got the 10-week boot camp. You got 6 hours masterclass and more. And of course, we have the schedule of millionaires coming to speak with you. Don't forget, if you need accountability, if you need somebody to hold your hand, you want to ask questions, you want to get in a small group, every Wednesday, I think at 6 o'clock, you have an accountability group led by Frank, old guy REI. Again, join that. It is in the evening, unlike a lot of our things which are in the morning. So again, folks, $20 a month. Time to join. Try it out. You don't like it, cancel. What does it cost? $20, a couple of lattes. I think you will enjoy it. And don't forget, if you can't make the morning sessions, they are all recorded. Go to the classroom section, scroll down, find a thumbnail that says special guest, and you will find, I think, 15 or so conversations already recorded there for you to watch. Self-management, out-of-state investing, reviewing a portfolio, that and much, much more. So folks, have an amazing day. Again, go check out Bill McBride, Calculated Risk. Shout out Lance Lambert at Resi Club for that excellent interview. All right, guys, take care. Have an amazing day. Later.